Hey, yo, what's up, Cave Trader? What a night. What a opening of the session. What a opening. What a opening. Mm, mm. I mean, I meant to take that short, but man, I just for whatever reason, I just can't seem to get nothing going. Can't seem to get anything going. Mm. Yeah, I know. Night fart. Oh no, I ain't short nothing. I'm not shorting anything. I am not shorting anything. I was talking about that short on gold that happened at the open. I missed the short. I missed it. Something told me to come to my desk at around like what 5 or something like that. And then my trading partner sent me the message, and then by the time I got to the charts, the move already happened, and I was like, man, fuck. But I am not shorting nothing. If anything, I got a limit to go long on gold right now. I wanted to short the pullback at 750 around 8 o'clock, but man, my daughter, for whatever reason, she chose to not eat her food at the normal pace that she normally eats, and I forgot. I meant to check the charts around like 7:50, 8 o'clock, because I know that that's where liquidity kind of gets injected into gold, and I missed this short right here. Missed a short. Yeah, I would have preferred to have taken the short versus potentially taking a long here, but yeah, I appreciate that. Honestly, I was thinking about that today, and boy, if we can get results like that every day and just wait for the market to show us what direction it wants to trade in, just like Alfred, it's literally extracting money from the market every day. So it looks like we got like a megaphone, a triangle. Looks like we got a triangle right now. So, or I guess what is that, like a bull flag, but it's in a triangle. So we get a break. Hmm. He says sometimes there is no opening range breakout, and I can't trade. I was actually thinking about that too. I was thinking about what are the days that I guess that it doesn't break out the opening range and it just chops, or it just continues to trend higher, kind of like what the Nasdaq did. Uh, I know today when I looked on gold to see if there was like an opening range play, nah, that shit did not work. It did not work. Or hold on, give me a second. Maybe yeah, cause yeah, this didn't work. It broke out, pulled back to the 21, and then it would have triggered, and then your feelings would have been hurt. I was like, well, shit. Well, shit. I mean, they definitely got the gold traders. Everybody that tried to. Well, actually, you know what? Maybe I'll take that back because this is the so that is the range right here. So that's the opening range. Oh shit. Oh god damn it. Oh shit. Oh wow. Wow. No wonder why this thing just took a crap. Gold broke out of the it broke down from the opening range to the downside. No wonder why it took a crap. Huh. And it did it perfectly. So if you try taking it long, I mean it was successful. Like if well not really. I mean it did trigger you in and then it stopped you out just for it to yeah, I don't know. Maybe it doesn't work that well on gold. Maybe it doesn't. At least it didn't work. The opening range didn't work today. But if you took the short at the breaker structure at the open, beautiful trade short. Mm. Yeah. Yeah, I see that. Actually, speaking of that, I actually got to document what actually happened today. So, yeah, the initial reaction. I've already got false break, false break, false break. So, uh, so far, I only have one break where it actually breaks out the first time without a pullback. But it seems like so far we're getting false breaks. Uh, and we're getting at least 30 points in drawdown, 20 points in drawdown initially. Okay, so what was the results of the trade today? What was the result? All right, so let's take that to the side real quick. All right, so and look at how it craps out of this range. All right, looks how it craps out of this channel and then comes right back into it. I think that ceasefire was known to people that knows. Uh, even though we did get this drop, after we got that drop, we had price take out the highs. We had price take out. So if anybody tried to actually short the break below the range, they got caught and used as liquidity because I guess people were still playing the opening range and they got trapped short right here. Uh, so, hmm. All right. So from the entry, so the idea, so the idea is to enter in a point above that range, I guess after a pullback happens. So that is the 845 candle. It pulls back to the 21 EMA. So that's the 45 candle. Actually, technically, price did not pull back this time. That's the 45 candle. Oh crap. As soon as it broke out, it didn't pull back. So the high of that candle right there. Hold on, let me get my phone. Yeah, so as soon as we broke out, so the high of that candle is 889. So 90 would be the trigger for me. There was no pullback. So uh, so before the pullback, and I'm not going to count the full move on this one from the highs to the lows. So it was 2218 minus 21,890. So that was a 128 point move to the down. So actually, it wasn't a false break. This was actually a break today. So I documented that wrong. I'm glad that I actually came back and fixed that. So where did I got the 29 points of drawdown from? Because it did not break. It did not break. At least on my chart, it didn't break below, or it didn't break above that candle that formed at 845. As soon as it broke above it, and I got triggered into this, it went straight there. Now there was a pullback that happened, but it didn't happen after it broke out like it usually would do. So yeah, okay. All right. So I just wanted to make sure that. All right. So yeah, that's the. Just wanted to make sure. So that's the candle right there. All right. So I had it right the first time. All right. So that was a false break. Okay. So that was a false break. So it would have triggered in. So it broke above it and then it pulled back. Uh, so the high of that candle was 889. And then the low of this candle right here was 848. Wow. And so that as soon as it, so this is where it opened. So it must have triggered and pulled back. And this was a 41 point pullback. And then it closed right here. And then it opened right here. It closed. And that's when the breakout happened right here. So the breakout actually happened at 847. At 847 is when the breakout happened. I might have to do that too. So that's the opening range high. So 885. So 886 would have been the trigger. You would have got triggered in, and then it would have pulled back 41 points. And then the high of this candle was 886. So this thing basically came right back. This candle would have triggered you in, and it would have continued. So it's 886. So 21,886. So 22,0 minus 21,886. So that move from the breakout to the high was a 132 point move to the upside. 132 point moves to the upside before we got a pullback that actually took out that low. Hmm. 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 All right. So, I mean, that would be technically that would be the full move because price came back, not only took out the opening range, but actually took out the low. So I don't think it would be correct to actually count this entire move as a full move. So the result would be 32 points, 132 points. The full move would be 132 points. But where we document what actually happened is that where it says if price reversed, so from 2218 was that high. This 21 minus 21 738 would be that low. So price reversed. So all right, so price reversed 282 points or 280 points to the downside and continued an additional the high of that candle was 2293 minus 21,738. And price continued an additional 355 points to the upside. Okay, so I'm gonna wrap this, make this a wrap. All right. So after breaking above the opening range, the MNQ pulled back 41 points. All right, pull back 41 points after bouncing off the 21 EMA. After bouncing off the 21 EMA, price traded 132 points to the upside before reversing. And I don't need to document what actually happened in the notes. Where price reversed, it gives more context. So I don't know if y'all guys can see that. Let me know if y'all guys can't see that. Okay. All right. So at 8:47. All right. So at 8:47 Central Time. Actually, let me just freeze this. Actually. Actually, let me set this up before. Okay. All right. All right. So all right. So we'll get these document sizes. All right. So the initial break happened actually at so the initial break happened at no, it happened at 8:45, didn't it? Or 8:46. So obviously the next candle was a false break. So at 8:46, and I think using the minute chart would be better. I don't particularly care about the seconds. I don't want to be that exact. I'm just going to use the minute chart, and we're just going to rock it that way. We don't need to be exact down to the second. We just kind of need just the surface data. The pullback actually happened. So I think was this candle. Yeah, so at 47, what was that? The high of that candle was 886. All right. So yeah, so this candle would have, so that candle happened at 847. It broke high, drawdown 41 points. If you took the initial break, instead of waiting for the pullback, if you took the initial break, you would have been down 41 points. All right. All right. So at 846, that was the time of the initial break. The pullback break happened a minute afterwards. It broke it high. The initial reaction was a false break. The drawdown was 41 points to the downside. The result was 132 points to the upside after the break. The full move would be 132 points. And how I'm calculating the full move, if price did not come back and take out this range and it continued higher after, so if it was like a slight pullback and a continuation, I would count that as a full move. So if the market held the value area high and continued to go, then the full move would be this pullback plus that. But unfortunately, in this situation, or not unfortunately, but in this situation, because price pulled back and took out the range high and low, well, we can't count that as a full move. So, or at least that's not how I'm going to count it. And so the result and the full move will be the same, 132 points, which honestly, you don't need, all you need is like 36 points of that, 20 points of that. So if you took the opening range break today, waited for that pullback and got tagged in, anything in this move would have made you happy. Anything. All right, so price reversed 280 points to the downside and continued an additional 355 points to the upside. And the note says, after breaking above the opening range, the MNQ pulled back 41 points. After bouncing off the 21 EMA, price traded 132 points to the upside before reversing. This is the style, the template, the wording that I will be using moving forward. I think this is very clear. I think it gives enough data to where if you read this, you'll understand it without understanding the context. So I think this is very clear. So after breaking the opening range, pulled back 22 points. After rejecting the 21 EMA, price traded 78 points to the downside. To the downside. Before reversing 162 points to the upside. And I'm just going to leave it like that. I don't need to come back and correct old data. Moving forward, this will be the terminology and the style that I'll be using. And once I fill up all this data, I'm pretty sure we're going to see a lot of false breaks from the Nasdaq. I'm pretty sure. And Cave Trader has already confirmed. He's already done the back test. I'm doing it the manual way. He's already done it already, and he's already confirmed that the Nasdaq does like to false break, pull back to the 2120 EMA, and then it goes in the intended direction. So the Nasdaq likes to get FOMO traders. If you're FOMOing the range breakout, you'll become liquidity. If you wait for it and accept if you miss it, you'll be a happy person. You'll be a happy trader. And we'll do it again tomorrow. We'll do it again tomorrow. But you'll be using this minute chart instead of the tick chart, so we can get the range as accurate as possible. And we're gonna just have it on the chart, and we'll just move from there. Man, I should have took that freaking long on gold, man. I was thinking about taking that long on gold, but I was like, man, yeah, you know what, man? I'll just wait until tomorrow to take it. I'll wait until tomorrow to take the long on gold. Right now, the market just needs to settle down. So I'm pretty sure you don't need me to tell you this, but the market opened up with such bullish momentum. And if for those that do not know why that happened, Iran and Israel has come to a ceasefire agreement. And I'm pretty sure that this information was privy to market participants, at least the ones that know, because this type of price action right here on the ES is abnormal. We kind of expect this from the Nasdaq. This is the type of bullshit that the Nasdaq does all the freaking time. We expect this price action from the Nasdaq. But when the ES is doing something like this, that's when this should have been a sign, or at least this was a sign to me, that we was going to see bullish continuation, because this is not how ES trade. The ES literally broke a trend line, and then out of nowhere, it started to trend back into the trend line itself. And what the ES did, which I find very interesting, is that it initially rejected from the trend line. And as you can see, that even though the bears are holding off this trend line right here, at least for right now, once price starts hugging the trend line and the bears are failing to reject it lower, we all know what's being built above these highs. We know that this is going to be engineered liquidity, that the bulls, all we just need is a bullish green candle to tap into them stops, a pullback, and then we can see that bullish continuation, which I think we will be. I think that's what we see. I think that's what we see. I would not try to short this. There is no indication that the market is ready to give up this move. Absolutely none. I wouldn't even, and this is coming from a reformed trend fighter. There is no indication that the bulls are ready to give this move up. There's no indication that they're going to fail. When we see bullishness like this, we have to wait for the confirmation. We have to allow the market to set itself up. We have all the EMAs, the short, medium, and long-term EMAs sloping to the upside. So even if we do see a push down, it's highly likely that there will be aggressive buyers looking to buy the dip on this. So shorts will be definitely stressful. They definitely will be. Hey, yo, what's up, investors? You said, what is my time frame? What are you talking about? Are you talking about this chart right here? If you're referring to this chart right here on the ES, this is the 1800 tick chart. So I use the 1800 tick chart on both the Nasdaq and ES. I feel that on both instruments, at least until volume increases. Now I have to be very clear that tick charts are based on the amount of volume that's traded in the market. If there was a lot more volume, then I would need a bigger tick chart. But because there's less volume, these 1800 tick charts right now are perfect. If we increase in volume, then I may go to like a 2000, 2500, 3K. Tick charts are volume based trading, transaction based trading. So, for all you volume traders out there, if you're trading a time based chart and looking at volume, well, you can get the best of both worlds by trading a tick chart. And I feel that tick charts tells a better story than a time chart. This is an hourly chart. If you can look at this chart and tell me areas of interest that you're looking at, I will applaud you, because when I look at this hourly chart, all I see is candles. I see no structure. I don't see anything. The reason why I look at an hourly chart is I want to see who had in the last hour, which side of the market was in control. And that's the only reason why I have this chart. This hourly bullish engulfing candle tells me that I should not even be shorting. I should be looking for long opportunities for a bullish continuation. These red candles tell me that I should be looking for shorts. That's how I use the hourly charts in combination with my tick charts. I don't go no higher than the hourly chart because I'm an intraday trader. So I'm not looking for swings. I'm not going to be on the 4 or daily chart. All I need is the hourly chart. On gold, I look at the 18-minute chart for the same thing. Gold is a low liquidity commodity. So I don't find any value from the hourly chart on gold. I feel that the 18-minute chart, 15-minute, it doesn't matter, provides the most value. And it provides me with the direction that I should be trading in. Like right now, this kind of tells me that we could see a bullish, or the bulls kind of regain control here. But with all these red candles, I wouldn't feel comfortable in the long. I would not feel comfortable in the long. It's obvious that the bears are in control here. It's kind of obvious. So all longs will kind of be off limits. I would be kind of looking for short opportunities. But at the same time, I wouldn't feel comfortable shorting this low because it swept liquidity underneath this low, that low, and I think another low. Yeah, so it swept liquidity underneath these lows. So I'm not saying that the shorts won't work, but I would need more information on this. This would be trades at this area right now would have a confidence level below 50, and that's against my trade policy. So I would have to wait for more information on this one. Are you do the gold orb at night? Oh, okay. Yeah. So on gold, I trade a 150 tick chart. This is a 150 tick chart. You say you do the opening range on gold. So you're talking about, are you talking about the opening range, or are you talking about like 830 to about 7, or 830 to 845 on gold? Which time frame are you using? So 8 p.m. Okay. And I guess I'm going to make the assumption that the range you're looking for is from 8 o'clock to 8:30, and you're looking at the break of that. Oh, 8 to 8:15. Okay. Mhm. You know, honestly, that is the time that I will not trade gold. I find that like after hours, 1, 2, 3 o'clock, like after midnight on gold, gold tends to, that's when she starts to overshoot a lot. She will overshoot levels. Like she'll just kind of keep going due to the low liquidity during those trading hours. Let me see if I can find an example. Yeah, like after 11 o'clock, gold kind of does her like she just goes. There is no price action. She just kind of goes after a certain time. And then like around like 7:30 is when you'll get your pullbacks and stuff like that. But yeah, like around like 2:30 after 11 o'clock, 10:20 or not 10:20, 10:11 12. Gold kind of just does her own thing. And I don't like trading gold during these hours. So I'm glad that I'm actually asleep during these hours because I won't trade gold. I like to wait. I like to start looking back at the charts around like 5 o'clock, 6, because that tends to be the time that gold kind of starts moving again. Yeah. So gold 15 minute. It said London open is 3 a.m. Eastern time. All right. I don't know what's up with all that, but oh. Mm. So that was 2 days ago. Yeah, it just seems like it's not as reliable. Yeah. Yeah, that first pullback. Yeah, it seemed like what is like at 7 o'clock ish. Yeah, like 7 o'clock. Yeah, I like to look at the charts on gold around like 6 o'clock. Just let the market set itself up. Because gold, I mean, is when gold is set up, I feel that gold is easy mode trading, but you have to be patient for the setup. So I like the fact that I'm asleep during the time where gold is setting itself up overnight, so I can get in at a good entry in the morning. Uh, you said gold 15 minute says for the month of June, 2 hour profit. Tested it this weekend. Mm. You gotta mean that. You gotta mean that trades 500. You gotta mean that. You gotta mean it. It's one thing to say it, but for whatever reason, we get on these charts and we do something completely different. But I will say this: I was talking to my trading partner. Yeah. I was talking to my trading partner today, and he was telling me that he was trying to get into that Nasdaq pump, and that he was feeling FOMO. And and this is very interesting for me, but I didn't feel FOMO. I did not feel the need to jump to get behind my desk and try to catch some of that NQ pump. For the first time in a long time, I did not feel the need to trade the Nasdaq because she randomly opens up 2 million points to the upside. I like to say that's growth. But here's the one thing that has been very consistent. When the market opens up, we tend to trade to the downside the next session. We tend to trade to the downside. I mean, I got the data. I've collected the data. And I actually got to kind of go back and fill this data up too. But I got the data. Every time we trade down in the New York session, we see a big recovery. Every time we trade up at the open, we trade down during New York. So we have Powell tomorrow. Powell is testifying again to Congress tomorrow and Wednesday. We usually get the volatility during the first one. The second one is not going to be as volatile because I believe the uncertainty is the first one, but we all know what Powell's going to say. He's going to start off with his Fed mandate and what the Fed is trying to achieve and blah, 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 blah. And he's going to be asked a series of questions that he's going to be expected to answer. And based on how he answers those questions, obviously the market, the algos are going to react, obviously, right? So tomorrow we will definitely see a lot of volatility. I wouldn't risk an account on Powell. I mean, you can get lucky for sure, but I definitely would not risk an account on Powell because the markets can and will make volatile moves. And I guess I've gotten to the point to where I just know that it's not even worth it. We know how to trade. We catch a lot of good trades in this during the stream. We catch a lot of good trades on gold, ES. If the Nasdaq don't start acting up on these orbs, we'll go back to trading the Nasdaq. The reason why the main reason why I kind of stepped away from the Nasdaq is because I'm tired of the inconsistency. I'm tired of the inconsistency. I need something like what I'm trying to achieve. Every time I get behind this desk and trade the Nasdaq, there's always that thought in the back of my mind: is the day the day where I make a wrong move and I blow up the account? And I'm just tired of that inconsistency with Nasdaq. One day she wants to trade, and then the next day she's doing all kind of shit. She's not respecting structure, and I'm a structure-based trader. And I hate the drawdown. I hate the small size. I hate when I trade small size and then all of a sudden she wants to work and then I get freaking heavy. And then all of a sudden she wants to pull back until I blow the damn account. And that's when she wants to bounce. You get tired of that shit. I'm already tired of it. I don't want to deal with that anymore. But with this opening range and if we collect the data on how to properly trade it, which we are, then we can go back to trading the Nasdaq for sure and make this easy Nasdaq money. 100 points to the upside. We had a 280 points to the downside and 355 point bounce. All right, so bullish trend, 456 points to the upside, 280 points to the downside, and then we had a 355 point bounce. And you can see that trend that usually when we open up, We usually get a deep pullback, and then we tend to kind of recover during the afternoon session. And that is definitely a trend that continues to show itself. We rarely have a situation where uh, the market doesn't start up and then we have a bigger pullback in the next session and then we see a recovery. We have a 156 point move to the downside and we see a big recovery during New York. And that trend just tends to, well, obviously not in this situation, but usually that's what we get. So, and I don't think that tomorrow will be any different. Right now we open green, so I expect during Powell that we should get a pullback of some sort. So that's what I'm going to start it. That's what I expect. We'll see if we get it. We will see if we get it. Yeah, I think so too. Well, I wouldn't say the best place. Gold definitely has a lot of money making opportunities. And the good thing about gold, and this is why I focus more on gold and I enjoy trading gold more than I trade the NASDAQ, is because from open to close, man, there are so many opportunities to make money on gold. You can trust the structure. I mean, gold doesn't do anything out of the ordinary. When I go into the gold chat on Top Step, when people say that they blow their accounts, it's all for the same reason: over leveraging and gambling gold. When all you have to do is wait for the pullback. Gold is not going to lie to you. Gold does not lie. It broke structure and pulled back, and from the high, so from what is this 369 to the low, that's a 10-point move. That's 11-point move. You don't need that much on gold. On one contract, that's $1,100. All you have to do is if you traded a 5 lot, that was $5,500. All you really need is 10 points on gold. You don't need more than that. If you want to oversize and trade like 5 points, gold has a lot of opportunities to make money, and you don't need a big stop. So that's why I enjoy gold, because it's a great mix between NASDAQ and ES. I don't need a big stop, but at the same time, it does make big moves if I'm on the right side of it. So we love gold. And it took trading gold to actually see the bullshit of NASDAQ. And that's why I don't like trading her no more. It just took gold. It's like, man, oh, okay. So I can just use trend lines, triangles, circles, and squares, wait for a pullback, and I can feel confident that I'll get into the move. And once I'm in the move, I may take a little bit of drawdown, but not enough to hit my stop, and I can get paid. I really enjoy that. And I bought one of those Starter Plus accounts with My Funded Futures, and I read the rules. The Starter Plus is very similar to the starter account, but without the consistency rule. But it's the same rules. It's literally the same rules. You can't request more than $1,200. So that Starter Plus account is definitely a trap if you don't read those rules, because it's the same exact thing. The only difference is that you won't get punished for your red days, unlike on the starter account where you will be punished for your drawdown, but you won't be punished for your drawdown on the Starter Plus. But there is no daily loss limit to protect you, so you have to protect yourself. That's going to be a challenge. And we've already done the math. All you need to make on those accounts is $450. You don't need to make any more than that. If you make any more than $450 on those accounts, then what you're doing is cheating yourself out of a payout. You have to kind of sit down and do the math. And once you take that first payout, that first week, that's going to be the most dangerous week, because you're only going to have $1,000 of drawdown left in the account once you take the payout. But the beautiful thing about that account is that every day, if you make $450, by the time you take a payout, your drawdown is going to grow. And it's going to get to the point to where you can make mistakes and you'll have, I think, like $5,000 or $6,000 left in the account at the time where if you choose, after you take that sixth payout, you'll still have like $6,000 left in that account. So that account is literally to be successful in that account, you have to compound that account over time. And once I saw the math play out, I was like, man, that's a beautiful thing to see. But my funded futures know that nobody is going to sit down and actually do that shit. They're thinking that that everybody's just gonna gamble. Cause I told this shit to Smith and he still did it. And I was like, well, sure. Well, I mean, it's your account. You can do whatever the hell you want. But making more than $450 goes against, you won't get the max payout. You won't get it. I mean, even if you get the first payout, $1,200, shit, you paid for the account. You got a return on your investment. So honestly, if you just get past the first, if you get to the first payout and blow the account afterwards, you'll still be happy. I don't see why you wouldn't be. I mean, unfortunately, you would have to start over, but it's a nice having $1,200, $1,100 that you didn't have before to get a new account and start over. It's not that big of a deal. And with this buy one, pass one, get one deal they're doing, you can have two accounts. So, yeah, man, math is a language of the gods, and I've come to accept that. Once I got introduced to math, the beauty of math, nature, people say that go into nature and you'll find God. I never understood what they meant, but the patterns, the mathematical patterns that you see consistently throughout nature. Yep, that's the language that God speaks, mathematics. And I take my time to understand math. I mean, before I was one of those people that said, "Oh man, I'm an English person." I'm an English person naturally. I prefer to read. Math was too complicated for no reason. At least was my initial thoughts of math. So I never took the time, or let me rephrase that. I believe those statements where people would say, "Oh, I'm a math person," or "I'm an English person, so I can't learn math." And I believe that, or I allowed myself to believe that. But in the field that I'm in, you need to understand math, even though you don't use it. As crazy as that sounds, don't use it, but I need to understand it to do my job. And if you're familiar with Khan Academy, I've already shared with you guys that I was watching MIT courses on YouTube day in and day out. I was doing Khan Academy, and I wasn't too proud to start at the kindergarten level. I started at the kindergarten level and worked my way up. I was when I was doing that, I was like, man, you playing. Like, why you start at the kindergarten level? Shit, maybe I might have missed something. Shit. I mean, it's been a while since we've been in kindergarten. Maybe they got some mathematics stuff that maybe I forgot, but no. But I started from kindergarten and worked my way up. And and honestly, I would say that that's kind of helped me because I look at these charts and all I see is math. I mean, that's kind of all I see when I look at these charts. Honestly, the market makes measured moves. And Fibonacci retracements, Fibonacci extensions, all that shit, the market makes measured moves. It creates triangles, it creates circles, and it creates squares, which are all math, geometry, all that. So, and I kind of have a mathematical equation for Nasdaq that I kind of look at, and it does work. But I'm just too impatient for it to sit here and wait for it. I usually blow my accounts because even though the Nasdaq kind of does make certain, like it does move, like its legs are a certain amount that I kind of figured out. But what makes kind of Nasdaq kind of dangerous is that it will kind of make that move, but then you just don't know if it's just going to randomly pull back before completing it. And then once it completes it and then it goes back. It's just the randomness sometimes that makes the Nasdaq. It's the randomness and FOMO that makes the Nasdaq challenging to trade. But if the Nasdaq was slower and if it didn't move as fast as it did, or if it doesn't move as fast as it does, the Nasdaq will kind of be easier to trade because I feel that the Nasdaq kind of hits people emotionally. So you're going to be blinded to what she's actually doing because she'll have a very impulsive momentum move to the upside, get you to get in like, oh my God, I'm missing it. And then she'll start chopping. And then she'll pull back and stop you out. And then once she gets you emotionally, then she has you. You're going to give her that account. You will give her that account because that's what she requires. All right. You know, YM is definitely a swingers market. I really don't see how anybody can trade YM in one of these prop accounts intraday. When if we've already looked at YM multiple times, she is a swing account. If you miss that entry, you might as well just go to something else because she's not pulling back. YM does not pull back. She does not pull back. You got to get that initial move. Like, I mean, look at this. This is an hourly chart. Let's go to like a 5 minute or something like that. Where do you see the pullback? You're not going to get into YM once it's already made its move. It just goes in one direction. This actually looks like what the Nasdaq did today. Actually, it likes to just go in one direction. So when I look at the YM, it's like, yeah, okay. I mean, I was prepared to trade YM in that swing account, but intraday, I wouldn't even touch this thing. And that's just me personally. I wouldn't even touch it. Yeah. Yeah, YM's a swing instrument. And did y'all guys see Tesla, man? The crazy thing is that I saw this news over the weekend and I disregarded it. I didn't know that Tesla was going to come out swinging like this. And y'all saw that Tesla or that Elon Musk made up with Trump and they forgave each other. Man, we all knew that shit was a cash grab, man. We knew that shit was just an opportunity for the big players to get people to sell out of their position so they can do this shit. I bet that everybody that sold out of their Tesla position is punching, kicking the air, contemplating if they want to run into the wall or not. Because this move right here was a beautiful move to the upside here on Tesla. Rest in peace to anybody that sold out of their position because Trump and Elon started fighting over the internet. Just imagine making an investment decision because Trump and Elon started fighting over the internet. Yeah, I think like this was the dump right here. This was the dump. And if they didn't get back into it, they missed this whole entire move going up. I mean, shit, if you sold right here, like if you sold it and then it just pops right back up, yeah, my feelings would have been hurt. We all know that Tesla does not stay bearish for too long. If we see an extreme bearishness in Tesla, we all know that it's just a deep pullback because of all the bullishness. Tesla has always been bullish. Even when it's bearish, it's bullish. It's just pulling back. We got to think that Tesla would probably take a couple of days to get back to the pullback area because it's like weeks and days where it will just go up in one direction. This thing just goes up. Now, I really don't know why anybody would short Tesla when this shit just goes up. It just goes up. And this is a daily chart. And it looks like when Elon and Trump started fighting, it was just a pullback into an area of support. April. Yeah, it was just a pullback into an area of support right here. It was just a pullback. Filled the gap. And then as soon as price filled the gap, price did this on Tesla. We all know that that fight was or actually it was this one. Or was it like they started fighting like in May or June? Whichever one that pullback was, it was just a pullback into support. And when we was talking about it on stream, I was like, man, they're gonna buy this shit. And sure enough, that's exactly what they did. So I sometimes think about going back to playing on options, but I keep giving the market makers all my money. So I'm not trading options anymore. I'm not trading options anymore. I had so I got my last option play was I bought me some I think they were what $5 XBX calls, and I think it was either Powell or it was one of those days where I think Microsoft or one of those tech companies were had earnings. I bought me some $5 XBX calls. The thing shot up $200. So I 200x my money. And y'all know I let that shit come back to zero because I thought that this thing was going to keep going higher. And I was like, you know what, man, I got to stop. I mean, me and options just don't mix. I can make the money. I just don't ever want to take the profits because every time I take profits, it keeps going. Every time I don't take the profits, it comes back to my entry and it expires worthless. So it's like, well, shit. But okay. All right. Well, gold is definitely seems like it's about to break out of this triangle, this bull flag. So we got a bullish move into a range. So we should expect another move, potentially trading back into this range right here. I wish I was able to catch this one long because I really contemplated about getting in right here. I really did. But I was looking for price to come down a little bit lower because of how bearish it was. And of course, of course, of course, the bulls picked it up. And if I actually got in at this trend line, but it wasn't because it bounced at S4 and I was actually looking at getting into there, getting into this long at S4. But then I was like, nah, just let me put my entry down a little bit lower. But I guess S4 was the S4 was a play, I guess. The Nasdaq has given me so much trust issues. I don't even trust support sometimes. Trading the Nasdaq for so long, that's what the Nasdaq done to me. I don't even trust support and resistance on other instruments sometimes. Okay. Well, this is the ES. The bulls and the bears are still fighting at this trend line. They're still fighting at this trend line. So, like I said, I think the bulls break out. I think the bulls are going to probably break out above that support trend line. and we'll probably see price continue to go higher. And we do have another trend line though. I kept these from last week because I want to see if price is going to react at these lines. I want to see if price is going to react to this trend line. This trend line right here is going off into space. I don't think we'll see. We'll see what happens, because if we get a break of this trend line, then price might actually try to react at this one, for this one going up in this way and this trend line going that way. So we'll see. We'll see if the market reacts there. You know what? That's absolutely true. The market has definitely divorced itself from the reality of the market. Once the market had the taper tantrum, when Powell raised rates after it was at negative interest rates, the market has not been the same. Ever since COVID, the market has not been the same. The market doesn't necessarily even trade the same. The Nasdaq just does whatever the fuck she wants. ES is now trading outside of its 10, 15 point days. You got to remember the ES used to trade, maybe if it was lucky, intraday, maybe 10, 15 points. It may trade 30 points back and forth. Like it might start at 0, trade to 15, and then trade back to 0 and have a 15-point day back and forth. But we got the ES literally trading 100 points in a session. The ES literally opened. Let's actually do the math right now. 118 minus 75. The ES opened with a 43-point move to the upside. You know something's up. The ES is trading how the Nasdaq used to trade. The Nasdaq is doing whatever the fuck she wants to do. We did not have 300, 400, 500 point days on the Nasdaq every single day. But now we do. Ever since COVID, 500 points is nothing. That's normal now. The type of movement that we see normally, if this happened in the past, man, everything would be chaotic. Every day would have been a Black Monday. It would have been a Black Monday through Friday, maybe even Saturday. The market's closed and they still calling it a Black Saturday. What put this into perspective was I shared with you guys that I listened to the Market Wizards book, and they was talking about how 4,000, 5,000 on the Nasdaq was too high. And they were talking about the internet bubble and stuff like that, and how it's like there's no way that the Nasdaq is going above 5,000. As crazy as that freaking sounded at the time, it's crazier to even think that shit. Why didn't they think the Nasdaq would trade above 5,000? The Nasdaq is literally in the 20,000s now, above that. And it was ES that was actually volatile at the time. And over time, the ES stabilized, and it was a Nasdaq that became the volatile instrument to trade. So it's just interesting how these instruments evolved over time, and especially after COVID. Hmm. Interesting. Shit with Netflix. Oh shit, actually, what's that? Well, I'm not gonna say it. We'll talk about it Friday. I'll talk about it Friday. It's about a TV show that's coming out. I wanna talk about it. I kind of want to forget that it's coming out, so when it comes out, it's like, oh yeah, it's out. Me and my girl will definitely be watching it. Hmm. Shit, I might just do the opening range on the ES. It seems like, man, the ES is actually better fit for the opening range breakout. We take the opening range breakout on the ES. Hmm. Nope. Yeah. The one time you full port, that's when everything goes wrong. So I have a couple of Tradeify accounts that I got at a 45% discount joining one of their streams one day. And they were giving out 45% discount codes. And I was able to get a couple of them. I don't know how. I'm not going to complain, but I was able to get about what, 6 accounts, and I got one of their 9K accounts for 45% off. Should have got 2. I should have got 2. But I got like 4 or 5 50Ks, and I blew all them shit gambling. What I'll probably do is I think they actually activate, they rebuild at the end of this week. They rebuild at the end of this week. So what we'll do is document what happens with the orb trades, and then next week we'll take what we learn and we'll pass those Tradeify accounts, just trading the orb strategy on the Nasdaq. Hmm. Hmm. Dude, man, that's a lot of. Man, I should have took that damn gold trade. God damn. Damn it, I should have took that trade, man. Dude, I should have took that gold trade. Hmm. That's 2 trades that I didn't take. And honestly, this will probably be these so these 50Ks that I'm getting, or that I have, this will probably be the last time that I get 50K accounts. This will be the last time I get 50K accounts. I think moving forward, I'll just stick with the I think 100Ks are probably the best. Because every time I trade these smaller accounts, it just seems like any position size that isn't under 10 micro contracts is too big for the account. Any wrong move in the account, it results in a significant impact to the account, to the point to where it's like I might as well trade half size positions, like 5 to 6 micro contracts. And I don't want to do that. I only do the growth accounts. I don't like accounts that have trailing drawdowns. The only accounts I trade like that are the Apex account, but you see that I only trade the 300Ks with the Apex account. And I only buy them when they do the 90% off, the real 90% off, where it gets rebuilt at they sell it for $18 and it gets rebuilt at $18 or $36 or however much money. Oof. Actually, I think I might have some Apex accounts that actually may be rebuilding too, if I'm not mistaken. Yeah, so on the 30th, I got a couple of 250Ks that's going to rebuild on the 30th. And then I got a couple of that's going to rebuild on the second, 300Ks. So basically, I have about four more rebuilding. One, two, three, four, five, six. Yeah. So yeah, so for these I guess if you buy like the 250Ks or 300Ks, the ones that they have a special deal on, they get rebilled at the initial price is $18. The follow-up price is $36. And buying the $80 subscription fee, that makes it a $100, maybe $150 round trip, which is cheap for the size. Just ain't that trailing drawdown. Mm. Man, that should took that long. Okay. Mm. Yeah, that seems about right. That seems about right. Back into that. Yeah, I think probably like what 72, probably, maybe. But I mean, this thing is making its way higher. I wouldn't even short that. It wouldn't even be worth it. Yeah, and that's not even worth it. That's literally not worth it. 78. Yeah, that's not even worth it. Well, I guess. Well, I mean, I guess. Yes. Both the Nasdaq and ES is both literally just floating in midair. Okay. Yeah, why would you do that? Why would you do that? Stupid ads. Maybe I just need to. Hmm. Uh, yeah, it probably, and it probably will. It probably will. Probably will. Man, I hate when the market just slow down like this and nothing is happening. You know, honestly, I was looking at CL today, and me and my trading partner, we talked about this as well. But I think the biggest sign that nothing was probably going to happen is that if you traded CL today, we didn't get a big move in CL like I thought that we would have. We did not get a big move in CL today. CL kind of performed horribly today. If anything, CL sold off. 500 trade says that he got mad today because he blown a reset. Total waste. Yeah. Did you lose a funded account today? But yeah, look at that. Like CL just sucks. My God. CL did not get the reaction that everybody was looking for. Honestly, CL did the complete opposite. CL sold off like they just found like a new oil rig out there that can just supply them oil. Usually when we get conflict in the Middle East, oil usually sees a pump, but not this time. Oil is straight dumped. But if I went to get gas this weekend, that shit was expensive. So I know that that shit ain't correlated. I was like, man, this shit is expensive. More expensive than what I was used to. It was like what, $3? $3 for some gas when it's usually not. And I was like, man, that's expensive. I even went down to the next gas station down the street just to make sure I wasn't getting cheated. And that shit was higher. I was like, well, shit. Well, let me just pay for the damn gas, I guess, before somebody's gonna be out in the back pushing it. Yeah, they definitely did. They said to go over $100. Yeah, okay. Go electric. Hey, yo, what's up, Santiago? Yeah. I think if the news said that shit, they got everybody excited, got the bulls started to buy, thinking that we was going to pump up $20, which we should have. But just like Rudkit said, market did the opposite. Oil dumped and the indices pumped. And dude, we're not that far off from all-time highs. We are not that far off from all-time highs. Okay. We are not that far off. We didn't get to know 700. I know that. Or we didn't get to 700, right? That can't be right. Let me just look at the continuing contract. Yeah, I'm not trading anything either. I wasn't able to get into a trade today. Yeah. Yeah. Yeah, there was nothing. There was really nothing on I mean, if you missed the pump, then unfortunately you missed it. I mean, that was the only trade. Yeah, if you look at the continuous contract, this thing is saying, did we get to 700? That's not the all-time high. I could have sworn we got to like 6. 22.6 on the Nasdaq, but look at the daily chart because I know this thing can't be right. Yeah, like the all-time high was like at 6 or something. So it's saying that the all-time high was at 425. I thought it was like at 6. Was there? Yeah, I'm not front running levels anymore. I'm not front running nothing anymore. I learned my lesson. I blew that account trying to front run that down. The level that I was looking for, trying to be cute, trying to front run it, thinking that, oh, I just want my points now. I don't want to wait. Just for it to run my stop all the way down to my original entry, blow the account, and then go straight to heaven, taking my account with it. And I appreciate that, Cave Trader. Yeah, I'm practicing more discipline. I've gotten to a point now where I think it might have always been the Nasdaq. I think just for as long as I've been trading the Nasdaq, it's been consistent adrenaline and cortisol. But now that I've kind of stepped back trading the Nasdaq or uh stepped back from trading the Nasdaq as aggressively as I used to, I feel myself kind of rebalancing. Like my mind is kind of rewiring now. I'm more patient. Like when the fuck did that happen? I feel like I'm more patient now because I have to be trading the ES or gold. I have to be patient. I don't feel like I shared earlier in the stream. I didn't feel FOMO when I saw the Nasdaq shoot up 10 million points. I didn't like, oh my god, I need to get in this. I was like, I'll just wait for the pullback. I don't know what the hell is happening, but I'm writing in a journal now. When the fuck did that start happening? Like I'm documenting my trades, got a trade plan, got a trade policy. Was it always the Nasdaq? Was it always her? Was she always holding me back? Yeah, growth. Yeah, yeah, yeah. I feel like I'm a more I feel like I want to be a more professional trader. I'm not even looking for windfall trades anymore. I'm looking for those money trades that we talk about. Waiting for that pullback and getting these money trades. Like today in gold, in my off stream account, I took a trade that I wasn't necessarily 100% on, but it just fit my model. And I was like, you know what, man, I'm just going to take it. And I took it. I think I was in 2 points of drawdown and then was able to get $1,600 in the account. And I was like, man, just waiting for that money trade, man. It was an easy trade. It wasn't stressful or nothing. It just went straight to my target. It just seems like that first leg is a struggle leg, but then once you get into that second leg, it just bounces and shoots. And it's just, man, it's a beautiful trade to be in. Beautiful trade. Yeah, that's definitely true. That's definitely true. You're in long gold at 367. Yeah, I mean, honestly, that looks like it does look like gold. Oh man, I should have took that damn long. God dang it. Man, I should have took that long when I saw it. Damn. Man, I should have took that S4 long. I was like, man, I literally was looking at that thing and was like, man, maybe it wants to go a little bit lower. I knew it wanted to go long because the market already showed me that it wanted to go long and then it started to chop down. And I was like, man, S4 might be a trap. Let me just put it below it a little bit. Right here at this little area right here. Man, that would have been a beautiful trade right there. But there'll be another trade tomorrow. There'll definitely be another trade. I don't have to cry about this one. There'll definitely be another opportunity. So, but where are you targeting, Investor Z? Where are you targeting? Shit, you're almost there. You're almost there. Yeah. Yeah, he got it, man. This shit's gonna touch 72. Honestly, it's gonna go further than that, actually. Yeah, there you go. Target filled, baby. Target filled. Congratulations on that, man. Congratulations. But yeah, I think Investor Z said the right words. I'm out of time for this session. I'm definitely going to bed. My daughter did not allow me to take a nap today. I was not able to get like a quick nap today because my daughter was like all over the damn place. Kids, they like going to sleep, but they can't stand you going to sleep getting some damn rest. Freaking swear. It blew out of that opening that IB range. Yeah, that pullback to the 21 EMA, I saw it, but I was like, I'm not taking it. I was gonna actually, I was already in the sim. I was gonna take that pullback, but I was like, nah, I'm not gonna take it. I'm not taking that. I'm gonna get out of that habit. I mean, it would have worked. I want to kind of get out of that habit of taking these non-planned trades. So you didn't plan for it, I ain't taking the trade. But all right, guys, I'm definitely going to bed, club bed. We'll definitely come back tomorrow morning. Remember, we got Powell tomorrow testifying to Congress. That's definitely going to shake up the markets. We did see the market open with a bullish move. The data shows that when we opened up with a bullish move in New York, we usually see excessive bearishness and vice versa. So that's definitely something that I'm going to be paying attention to. We definitely will take the orb trade tomorrow on the Nasdaq. We will wait for that pullback. We will enter the trade at the second breakout and we will document the experience. And well, just move forward from there. All right, guys, that's it for me. We'll definitely come back tomorrow and we'll definitely look for more opportunities to earn some more money. And with that said, peace out, everybody.